I'm Nev Harris, and I help agency owners find the profit hidden in their business. Accounting could be daunting. And it doesn't have to be. The reason it is because I like to say it's spoken in almost a whole different language. I call it like accountantese. And I think it's designed to just confuse people, basically. If you understand these simple concepts, you'll be able to rock and roll with your accounting. And so it's cost, profit, and revenue. Well, cost breaks down into two things. All right, now this is foundational. Now, understanding this is the absolute key to everything you're going to do, and I'm going to explain to you why. We have what's called variable and fixed. What we want to call them then is project cost, because with project cost, you only have these costs when you bring on a new project. So if you get a new client, you have these costs. You don't get a new client, you don't have these costs. And the other ones are fixed cost. Now, the way to think of fixed cost, they're the type of cost that you have to pay every month no matter what. They would be, say, if you rent, it would be rent. If you have a phone bill, like your cell phone for your business, would be your internet connection. If you have some licenses, if you subscribe to some SaaSes, those kind of costs, you have to pay them whether you have a client or don't. So those are your two costs. We have fixed, and then we have project. So how do we pay for our costs? Well, we pay for our costs out of our revenue. People think revenue, they think, I have a six-figure business. I bring in $220,000. Well, you might bring in $220,000, but that's just your top line number. That's just your sales. So we want to think of revenue as all the money we make from sales. And then to understand how much our business actually makes, we just subtract from our sales our costs. And that gives us our profit. All right, now that's our money. That's the money we get to keep. What happens a lot of times is people don't even account for fixed cost when they're doing pricing or when they're figuring out the profit on the project. They're just saying, hey, this is going to take me 10 hours. I'm charging this amount of money. This is my profit margin, and it's not true because we have those fixed costs. What I might think is a 30% profit margin, you might think as a 15% profit margin, it actually might be 18%. When we're looking at ratios, when we're looking at that, what's best to pay attention to is the trend. So when you're looking at your profit margin over, say, a 6-month period, and it's 40% over the 6-month period, the way you want to calculate it, and then all of a sudden it drops to 28%. And then that should be something going off in your head like, whoa, something changed this last month, because now I have a trend to compare it to. Profit margin is actually a pretty easy equation. It's dividing your revenue or your sales by your cost and then just multiplying it by 100 gives you a percent. And if the percent is over 1, then you have to flip what I just told you to divide by. That's how you figure out a profit margin. It's really easy, and it's one of the most powerful ratios you could follow. The reason to have a separate bank account is for clarity purposes, because you want to be able to look and say, how much money did I bring in? How much money did I have come out? All right, so it just helps clear everything up along the way. If you are an LLC, you become an LLC for 2 reasons: for tax reasons and for liability reasons. There's nothing requiring you to have a separate bank account, but if you ever get sued, they're suing your LLC, not you. If you're not using a separate bank account, then you have to prove that you're not, technical term, commingling funds. Like using that you haven't separated your company from yourself. So that's why it's like not legally required, but it would be foolish not to have a separate bank account. Here's the one reason not to have a separate bank account, and this is not what I'm saying, this is what people do. Do not go to the Mac machine and look at what your Mac machine balance is and say, I have that much money to spend. Because one, it doesn't account for any checks that people haven't cashed, or it doesn't account for, say you have like an automatic debit coming out for that SaaS license in like a week, and you're like, oh, I have $2,000 in my bank account, but you have payroll due tomorrow at $1,800, so you really have $200. So that's the reason you don't want to use your bank account balance. But other than that, it provides a lot of clarity for when you're trying to figure out how much money did I bring in, how much money went out. If you understand your cash flow, if you understand your revenue, if you understand your cost, you know how to price better, and then you know how to pay yourself. Because you know what money's coming in, what money's going out, and you know when it's going to be due. So we want to buy flexibility. We want to buy wiggle room. And to be able to do that, we want to separate money coming in with money going out. Okay, for some reason, like the first of the month is this holy day. And so, you know, it's when our rent's due, it's when we pay bills, it's when people want paid and everything like that. And it's when, if we have recurring revenue coming into our business, we charge for. And the thing is, it doesn't always happen that smoothly. So if you have money coming in and money going out at the exact same time, you buy yourself no flexibility. So in order to better be more comfortable with your cash flow, I suggest, you know, getting your recurring revenue in or doing your billing on the 1st and then putting off paying people, rent, everything else to the 5th. The 5 things you have to understand to really get a grip on your money are: 1, your costs. All right. 2, your profit, how your costs affect your profit. 3 are going to be your profit per product. So which products are profitable. The 4th one would be having a system in place to quickly and easily track this. 5 is going to be understanding your pipeline, so you know what the future is going to look like. I talk about cost being fundamental, and I've talked about that a lot. And here's why. Because once we understand our costs, we can understand how to price. And then once we understand how to price and we get our pricing locked in, then we could lock in our profits. Because we know we're going to have this much cost, we're going to price this, and we're going to have this much profit. And then from there, we can know exactly how much we need to pay ourselves. Because we know what our months are going to look like, so we know how much we could pay ourselves. And then once we've taken care of ourselves, you know, then we could go to take care of our employees. All right? Then we could look out for them. Then we could give them raises. We could take care of them. And then from there, we could have like marketing budgets. And then we can bring in more clients, and we can help more clients. And then we can bring more people onto the team, and then we make more profit, and that allows us to then take care of causes we care about, say in our community, say, you know, anything like that. So it all starts with understanding costs, to being able to price, to knowing how to profit, to then being able to take care of the people and the things in life that we care about. So it all flows down from understanding our costs.